Okay, welcome back to Laptop Trader. I just wanted to create a quick video for you on finding some new ideas. If you wish to be updated when new videos are published, hit subscribe now. My email contact is laptoptraderphil@gmail.com, and this channel is at Laptop Trader on YouTube. This video, is for information only and should not be considered investing advice. Caution, trade at your own risk. Good luck. Invest in yourself first and then invest in the markets. Just want to make a quick video. This will be about a 20-minute video at the most. Just a comparison of three companies in similar industries and then using a process to help find opportunities. So I want to do a quick comparison of three companies in the industrial sector and the electrical and automation industries. This will not be a pure apples to apples comparison, but more of a comparison of three large companies with slightly different business models and why one would stand out as a potential future trade or investment, and why using some and how to use some quick analysis tools. This is not a recommendation or even a suggestion, but a quick lesson in finding some new opportunities and being selective with individual company stocks. We can use the same process for any industry or group of stocks. So I chose symbol Rockwell Automation, which provides industrial automation and information solutions worldwide. They have a 52 billion cap, or 52 billion market cap. GNRC symbol for Generac Holdings. They manufacture power generation equipment and power storage equipment. They have a 12 billion cap. And symbol PATH, UiPath Inc. And they create software for robotic process and automation, and they have a 6 billion cap. So here is a 5-year monthly chart of Rockwell Automation. This is just what I see on this chart, right? We have these pivot points, these high pivot points here, and an area of resistance or supply. It seems just like price cannot get above that area for over 3 years. We also have a base, what I would call this big base of price. Here we had a fairly tight area of pricing where prices were closing in the same general area. That's why those candles look so tight, and the closing and opening prices are very similar. Then we had a move up out of that area. Then we had a retracement down, and then we came up with this 3-bar turn here, or a buy setup. And this candle was a key candle in that chart formation, and that's why I put that arrow there. Another interesting area were these 3 months here, where price essentially closed in about the same place over this 3-month period, and then from there price went into more of an uptrend. So that's all I see on that chart, is the transition from a base into an uptrend, and a few key areas that you could have got involved, and by putting the odds in your favor, getting involved at the right time. Also, using Rockwell as an example, this is some of the metrics that I would look at, because growth is like fuel for stock prices. The more, the better. It's like more horsepower for a vehicle, right? The more horsepower, the faster that vehicle can accelerate. Well, the same is true for stocks. And some of those key things that Wall Street investors look for are revenue growth, and earnings growth, and dividend growth, and growth in sales, and growth in net incomes, and both on an annual basis and on a quarterly basis. So when you see earnings reports, they're basically reporting what happened the last quarter, and so everybody's watching that, saying, man, what happened? Is this company still growing? And how fast are they growing? And then that usually translates to growth in the stock price. And we can see here on Rockwell, 1-year return over 29%, 3-year return over 39%, and a 5-year return over 56%. So those are pretty good numbers for a company with a 52 billion size, or a 52 billion market cap. So very respectable numbers for Rockwell. So I like that, and I think that's why Rockwell went into this growth phase, right? As far as the stock going up in value, because the metrics and the growth matches that, and that's a reason why most likely Rockwell started growing. Before that, during this 3-year base, it was pretty stagnant. There were some ups and downs, but no real growth in stock price. So that's what I see there. So that would be, at this time, would I buy, sell, or hold Rockwell? Well, I wouldn't buy it at this time. It seems to me to be kind of extended up in value and market cap, and so I would wait for this to pull back before I would buy Rockwell. If I own Rockwell, if I had currently owned Rockwell, for me it would be a hold, because there's no reason to sell it. It seems to be doing just fine, going up in value, pays a dividend, and it seems to be a very strong company. Would I sell it here? I would only sell it here if I was a short-term trader. After this 3-month run up, yeah, I would consider selling it here, taking profits and looking for the next opportunity, because it looks like this red bar in July is going to signify the most likely next move is going to be some sort of retracement down or sideways in price. So yeah, if I let's say I bought it back here last year and it's moved up whatever, 50% or 100% or whatever, yeah, I'd probably take profits, either full profits or partial profits, and hold a very small position for the future. So that's how I look at Rockwell. Generac Holdings, again, also shows, the different stages of a market cycle. Big 3+ year base, and now it's kind of starting to move up the right side. This looks very good in April, May, and June, and now in July it's this large red candle on the right side. Looks like a little bit of trouble for Generac Holdings. Before that, it looked pretty good, like it was starting to trend, like it had transitioned into an uptrend. And so that was on my watch list for that reason. Let's take a look at some of the quick fundamentals for Generac. We could see, over 12 billion market cap. It's got annual sales of over 4 billion, annual net income of over 159 million. Last quarter sales over $1 billion, which is kind of in line with what I would expect, right? So 1/4 of 4 billion, 1 billion, that makes sense. And then last quarter net income over 73 million. And to me, that seems high compared to the annual net income of 159. Like, that's almost half of that annual net income. So to me, that looks good. Like, if we're really growing income quarter over quarter, that's good, because if there's only 1/4 of that, well, that would be kind of in line with what we expect. But since it looks to be growing at a faster rate, then I think that's positive. On the negative side, 1-year return is very good, over 43% in a year. 3 years pretty good, over 48%. But 5-year is not good at all, minus 52%. So obviously this was affected in some way by the market or the economy. And they really haven't been growing over the last 5 years, even though 5-year revenue growth is respectable at double digits, right, over 69%. But earnings have suffered, minus 2% earnings growth over that period of time, and no dividend growth. I'm not sure if they pay a dividend or not, but there's no dividend growth either. So those two numbers there kind of stick out to me as far as a red flag. So at this time, if I was looking at Generac, again, in my mind, would I buy, sell, or hold this company at this time? If I bought it way down here, I would probably try to hold it a little bit longer. If I bought it up here and this thing's selling off, I would not hold on any longer. I would get out to prevent any further losses. And I certainly would not be looking to take a new trade at this time in this company based on both the chart and the fundamentals. If I had traded it in here somewhere above this line of resistance or this line of supply, and I bought it here and it came up here and now it's retraced 100% against me, I would probably get out just to prevent a loss and just put this back on a watch list and see where it goes from here, right? So one thing in trading is we don't want to take big losses. Small losses are key in trading. So that's how I see Generac as far as buy, sell, or hold. And then UiPath, symbol path. To me, this chart looks okay. It's got a 4+ year base down here, right? It's sold off. It was IPO at some point. It's gone to this very long base, and I just drew some lines through here as a potential area for supply or resistance. Some things I like about this chart is up here we've got a lot of area or white space or blue skies for price to move into. And what happens is over time, any resistance to the left becomes less and less significant. And if and when prices start moving up, that can be very advantageous because all of a sudden nobody wants to sell the stock. There's no real supply left in the market and demand takes over. So the things I like about this chart are that the large increase in volume, right? So far in July, this has traded over 75 million in volume times 12. 15 a share is probably close to $100 million of money flowing into this company. That's a significant number in my opinion. And the other thing I like about this chart is where the price is at now versus where it could go, right? So if it went from 12, 15 to let's say just $40, that would be over 200% gain. That's to me is probably potentially worth the risk to reward, right? I like that risk to rewards. But the question is, can the stock get going in that direction? So far it hasn't, but volume says it could, that there is some real interest in this company, okay? So let's look at the stats. So newer company, smaller market cap, about just over 6 billion market cap, and right, that's a lot smaller than Rockwell, which is a 52 billion market cap, much more established company. But that doesn't really matter. I'm just looking for opportunity. Annual sales, right, 1.6 billion. They do have annual net income over 282 million. And then last quarter sales over 418 million. So that to me is kind of in line with that 16 billion. I like that. This is a little bit of a caution or a red flag for me. This last quarter net income, 22, just over 22 million in last quarter. Well, when we compare that to the annual figure, that seems low to me, right? Because 282 is pretty close to 300 million, right? 4 in a 300 million would be about 75 million. Right, so this number to me is low. This should be more like 60 to 70 million and growing. So to me, that's a little bit of a red flag. The return numbers are just not there because it's a newer company. It's in a base, right? -1%, minus 3-year return, minus 5-year return. So, but again, if I'm looking at a stock that's in a base, I'm not too concerned about that. It just tells me that the stock hasn't performed over the last 5 years, but we're looking for something going forward. I do like this 5-year revenue growth, and I put a star there because I believe that's probably why we're seeing money flow into this company. They have a nice solid revenue growth. In other words, sales and revenues are there, which tells me that there is a demand for their product or service. And so you don't get triple-digit sales and revenue growth if there's not a demand for your product. So I think that's what Wall Street sees. I think that is why we see this influx of money or this volume increasing into this company. Again, I don't know this company very well, but that's okay. If you guys want to, that could be a potential area of curiosity. a potential one to put on a list and start watching the metrics in the chart. See, okay, is this a good opportunity for me or not? So those are just three I wanted to highlight. Three different companies, similar industry, similar sector. And how would I look at path as far as buy, sell, or hold? At this time, I would consider a buy if I went down to a lower time frame chart and saw a some sort of setup or chart pattern that would put the odds in my favor, right? Again, I've already mentioned that just the upside potential of this, if I got a nice entry, even if it went half of that, right, 100%, that would be a nice gain. So I like the risk to reward in that. The metrics to me are kind of lukewarm, I would say, other than the revenue growth standing out. So if I currently held this company, I would probably continue to hold. I wouldn't really want to sell right now if I was already holding. So we've got a question mark on the buy. Yeah, that's probably where I'd be at. If I already owned it, I'd probably hold it and see what happens over the next 6 months to the next year in path. Okay, so that's just how I look at those three companies, using some quick charts, some quick metrics, and stuff that is readily available either through a platform or even just through your phone. You can find these metrics. So using that, let's just recap of our process on finding opportunities, right? So let's pay attention and make lists of public traded companies and put them into a platform of your choice, right? So just start separating them by industry and watch them once a month or once a week and see where they go. Get curious. Begin sorting them either first by chart pattern or first by fundamental metrics, or however you choose to sort them out. I generally use the chart first. And then choose some metrics that make sense to you, right? I personally use market cap, sales growth, revenue growth, net income, earnings per share growth, and a few ratios like price divided by earnings and growth, price PE or price divided by earnings, PS or price divided by sales, income growth, ROE, return on equity, price divided by cash flow, PCF, profit margins, etc. And that's about all I use as far as some quick metrics for a company, right? I don't spend hours on the metrics. I try to make a decision fairly quickly. Let the facts tell you which one is a good opportunity. Those facts can be as simple as, I use an iPhone and I like the service, and then how many other consumers use Apple products, right? So I start to get curious. I like the iPhone. Do other consumers like the iPhone? And then you do a little research, right? And you find out Apple is one of the top companies in the world. Therefore, I may want to look at some facts and a chart of Apple. So it doesn't have to get super complicated. It can just be a great consumer company that has a great service and a great product like Apple, and then you simply invest in Apple. Right, so I then take my best ideas and I put them in a list for this week's trading activity, this week's list. Maybe, I may get that down to 50 to 100 stocks out of 9,000 publicly traded companies. And then the market and the economy is not static. It changes. It's very dynamic, and so we need to pay attention to what's new. I have a list of companies that are in the business of consumer payments, like SoFi, PayPal, Affirm, and they offer consumers quick and easy payments and credit. So I put them in a list and watch. So you can use this process on any group of stocks you choose to explore and get curious about investing and trading. Then you can also run scans to find ideas. My busiest time is in the beginning of a new month, as that is a good time for me to look at my lists for any changes in the market. So I don't spend a whole lot of time doing this. It's in the single-digit hours per month. This process, or one you create, will give you more insight and confidence than any news program will, right? You will actually get a feel for the market, and no training video can replace that experience. So I could give you guys suggestions and ideas, but if you don't get a feel for the market and you don't have confidence, you probably won't do very good. You probably won't even be able to pull the trigger on a new trade. But here is a example watch list that I created of travel and vacation companies, right? There's just a few on here. I don't know, 8 or 10 companies, whatever. And it's just, I just put them in a list and start watching them, look at the charts, see which ones are growing, which ones are not growing, which ones have income and earnings, and which one is the largest company and which one is the smallest company, which one has the potential for growth, and just by using the charts and some quick facts, right? And so you can just see I put in a travel and vacation list, right? Marriott Hotels, Hilton Hotels, a couple of airlines, United Airlines. Sorry, that was supposed to be American Airlines, not Alcoa. Expedia Group, Travago, and Hilton Grand Vacations. So, and then I just watch that list, and for any changes in the travel and vacation industry, maybe they're on a growth trend, maybe they're not, and just see if there's an opportunity. So that's it. Here's another watch list I created of payments, right? So I create the watch list in this platform, payments, and then if I want to look at these companies in a chart form, I just click on this flip charts symbol, and it will bring up just these companies in a chart list that I can quickly go through, right? So as far as payments go, right, we can see, there's the big payment companies like Visa and MasterCard. SoFi is a fairly new company, but there's some even newer companies like Paycom, PayPal. Well, PayPal's been around for quite a while. Shift for Payments, Bill Holdings, Paychex, etc. And then I can just go through that list and look for any opportunities in the payments industry. And whether there's something there or not, I don't know, but that's where I would start, right? Get curious, which companies are public, put them in a list, and start watching. Okay, here would just be a quick example of a firm holdings from that payments group. And right, the chart would suggest that this is in a very slight uptrend, right? Coming off of this low, slight uptrend for a firm, right? So in this list, here's a firm that's highlighted. From there, I can, click watch and put that in any other watch list. I can create an alert for like a price alert. I can take notes on the company. And if I click this little icon here, more data, that will get me to some of the fundamental data on a firm, right? And then if I just click left or right, I can look at other companies in that industry like Capital One Financial, SoFi, MasterCard, PayPal, etc. fairly quickly as far as looking at the charts, okay? So in closing, thanks for liking, sharing, and subscribing to this informative channel. Best of luck to you in your trading, and I'll see you next month in August. Any questions, laptoptraderphil@gmail.com or at laptoptrader on YouTube. That is it for this video. Bye.